Public.com presents The Rundown, your daily market update in 5 minutes. My name is Zaid Admani, and today is Thursday, May 2nd. In today's episode, we recap the Fed meeting and what it means for interest rates and mortgages moving forward. And then we get you ready for Apple's earnings that could be a pivotal one for the company. Then stick around to the end of the show to find out about a company that's worth more than the GDP of their entire home country. All right, let's go. Guys, Wednesday was a classic roller coaster Fed day for the stock market. Stocks were in the red for most of the day and then boom, shot up during Jerome Powell's press conference, but then went back down again. Ultimately, the S&P and NASDAQ both finished in the red again. So let's talk about what happened at the Fed meeting. The Fed isn't making any changes to interest rates. They're keeping the Fed target rate between 5.25 and 5.5%. No surprises there. That's what the market was expecting. But then Jerome Powell's press conference got started, and that's where things got a little interesting. Jerome Powell was rocking his purple tie like he always does, and he was doing his usual spiel of the Fed is committed to getting inflation back to its 2% target. And he even mentioned there's been a lack of progress recently to get inflation back to their 2% objective because of the hotter than expected inflation data this year. But then he said something that caught the market's attention. Jerome Powell said that he does not expect the Fed to hike rates, and that was a huge sigh of relief for the markets, because I think there were some investors that were worried the Fed could start hiking rates again because of the sticky inflation. But that seems to be off the table, at least for now. Those comments by Jerome Powell sent stocks climbing, but that was short-lived because Jerome Powell also said during his press conference that the Fed is going to wait to cut rates until they have more confidence that inflation is starting to move lower again. So that means that we could see no rate cuts for a while, maybe even the rest of the year. And once that reality set in, the markets just took a nosedive. So the S&P and NASDAQ went from being up more than 1% around 3 p.m. Eastern during the press conference to ultimately finishing the day down 0.3% in a matter of like 45 minutes. But I mean, hey, it's Fed day, right? I mean, there's going to be some volatility. So the big takeaway from the Fed meeting, everything's going to kind of stay the same. Don't expect any rate hikes or rate cuts anytime soon. So that means that mortgages, auto loans, credit card rates shouldn't change much from where they're currently at. And the next Fed meeting is on June 12th. All right, let's run through some headlines. We have Apple earnings coming out tonight, so let's give you a little preview on what to expect. Apple is expected to post their biggest quarterly revenue decline in more than a year. And the biggest drag on Apple's business has been soft iPhone sales in China. They're facing tough competition from domestic rivals. Sales were down 13% in China in Q4 of 2023, and recent data suggests that Apple's Q1 smartphone shipments in the region were down 19%. So that's going to be the major focus for investors. Analysts are expecting total Q1 iPhone sales to have dropped by 10%, which would make it the sharpest drop in more than 3 years. It's the iPhone 15, man. They're just not selling that well. Now, there is some optimism that better days are ahead with the AI-driven iPhone 16. Apple is hosting their worldwide developer conference in June, and many are expecting some major AI announcements. A few weeks ago, there were reports that Apple was reportedly talking with OpenAI and Google about generative AI integrations into the iPhone. So maybe we'll get more insight about this during WWDC. Another area to watch for Apple is their services segment, things like the App Store, Apple Music, Apple TV Plus, and more. It's been a bright spot for Apple. It continues to report record revenues, so we'll see if they kept that momentum going in Q1. A lot to pay attention to. We'll break it all down tomorrow morning on The Rundown, so make sure you guys are tuning in. Speaking of companies that are struggling, let's talk about Peloton. Peloton CEO Barry McCarthy is stepping down, and the company is laying off 15% of its workforce. Now, McCarthy is a legend in the business world. He was previously the CFO at Spotify and Netflix, and he's been the head of Peloton for 2 years. But things didn't work out so great for him this time. Peloton's business hasn't been doing so great, and their market cap has tanked as a result. I mean, Peloton was a classic COVID darling. Their market cap at one point topped $50 billion because of all the sales they were generating during the pandemic. But people aren't buying Pelotons these days, and their market cap today is just barely above $1 billion. I mean, who could have saw that coming? And as far as the layoffs, this is the 5th time that Peloton has trimmed their workforce since 2021. This new restructuring plan announced by Peloton this morning is expected to lower their annual expense by more than $200 million. And their stock is up 10% this morning in response to this news, despite the company reporting lower than expected revenue and fitness subscribers in their recent quarter. Let's talk about some stocks making moves today. Let's start with Carvana. Carvana stock is flying 35% after reporting record profits in their Q1 earnings report. Carvana reported a net income of $49 million in Q1, which was a happy surprise because Wall Street was anticipating a loss for Q1. Carvana's revenues also climbed 17% to $3 billion, beating Wall Street estimates. So yeah, Carvana had a blowout Q1 and they expect things to get better in Q2. So yeah, I can see why investors were hyped after seeing those results. Carvana stock was already up 78% for the year. That's before this 35% jump today. So huge year for Carvana so far. On the flip side, a stock not doing so good this morning is DoorDash. The stock is down more than 15% after reporting mixed earnings. DoorDash reported deeper Q1 losses than what Wall Street was anticipating. They lost $25 million in Q1, which was less than what they lost last year, but Wall Street was expecting better. DoorDash's revenues continued to grow. They were up 23% in Q1 to $2.5 billion, beating Wall Street estimates, and their orders on the platform also increased to $19.2 billion. So people continue to use DoorDash more and more. I mean, I know some people that are addicted to DoorDash. I'm pointing at myself. But DoorDash can't seem to turn that into a profit. Quick fun fact, DoorDash has only made a profit once in their company's history. That was Q2 of 2020, which was peak COVID. So, all right, let's wrap the show with a fun fact. Today's fun fact is about Novo Nordisk, the maker of Ozempic. The market cap of Novo Nordisk is more than the GDP of Denmark. Novo Nordisk has a market cap of $570 billion, making them the largest company in Europe and also larger than the entire Danish economy. The massive success of Ozempic is credited for helping expand Denmark's GDP by 2%. In fact, if it wasn't for Novo Nordisk, the Danish economy probably would have stagnated. So just crazy to see the impact that this one company, and this one drug especially, is having on a country. And the sales of these drugs aren't slowing down. In their latest earnings report, Novo Nordisk reported that sales of Ozempic rose by 42%, and their other popular weight loss drug, Wegovy, rose by over 100%. Just wild numbers. All right, guys, that's the rundown for today. Hope you guys enjoyed today's episode. This busy week is about to come to an end, but we are ending the week with a bang because tomorrow's episode is going to recap Apple's earnings, and we're getting the jobs report tomorrow as well. Make sure you guys are tuning in. And if you're on Spotify, tap that notification bell to be notified as soon as we post the episode. Thank you guys so much for listening. We'll see you guys back here tomorrow.
This is The Rundown, your real-time resource for news, events, and trends in the markets. All views presented in this show reflect the opinions of the guests. You should not take any mention of a publicly traded security as recommendation to buy, sell, or hold that security. Rundown guests are not financial advisors and are not affiliated with Public Holdings or its subsidiaries. You should make your own financial and investment decisions or consult respective professionals. Learn more at public.com disclosures. In partnership with Zaid Admani, brokerage services for U.S.-listed, registered securities are offered by Open to the Public Investing Incorporated, member FINRA and SIPC.